Hello and welcome to the Monday trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. State governments in Nigeria challenged to look inward to raise revenue generation as debt levels soar. And World Bank data shows Nigeria's manufacturing export plunges 166% to 778 billion naira. And oil prices extend declines start the week amid signs of weak fuel demand. And it's great to have you join us on the show. I'm Ladi Williams. Let's kick off with the markets now. Starting with the global oil market, we're seeing prices kicking off the trading week with signs of weakness at this point. We see Brent down 0.3%, $82.54 a barrel this morning, while WTI crude, that's the U.S. grade, that's below that $80 level, $78.07, also down about 0.2% this morning. Definitely this afternoon, actually. So definitely investors are going to be watching out for geopolitics this week to see signs of either weak demand or weak supply, and that's definitely going to push prices going up. Let's get a quick check on the global metals market. We see gold not looking so bad today, but it's down about 1.13%. Still holding on to that $2,300 level. Far back, it was trading at about 1,600. So gold is still looking quite strong, even though we're seeing declines in prices. Silver, on the flip side, $28.34, up about 0.58%, while palladium, marginal increase there, 0.03%, $982 per ounce. Let's get to all the stories now. We see Nigeria's revenue from the manufacturing export sector. That's plunged 166% to 778 billion naira from 2 trillion. That was the height reached in 2019. Newly published report, that's Africa Pulse by the World Bank, shows the trend since 2019 has been downwards, recording a significant decline attributed to COVID-19. That was in 2020. The Apex Bank specifically blamed the country's dwindling foreign trade on poor infrastructure and inefficient logistics, among other factors, taking that figure down. All right, let's look at other stories now. Definitely it's a Monday, and definitely everyone's looking out for inflation at this time. What we see right here, we're trying to build the locomotive industry, the automotive industry in Nigeria, and there's more thought to cutting transportation costs through the use of CNG vehicles at this time. In line with this, Nigeria's Finance Minister and Coordinating Minister of Economy, Mr. Wale Edu, has paid a visit to the Jet Motor Company assembly plant. The minister was accompanied on a tour by the Director General of the National Automotive Design and Development Council, and definitely, the minister says we should expect those CNG buses very soon. Take a listen.
It's two critical aims are being achieved, and what is important is that I've come to see what is happening with the CNG initiative. Where are the buses, as Nigerians are asking? And I've seen for myself, I've driven them, I've tested them, and I've seen them being assembled. And of course, in the very near future, they'll begin to be rolled out, and the benefit will be available to all Nigerians.
But I also know that to fix healthcare delivery in Africa, we need to have.
So the chairman of United Bank for Africa Group, founder of the Tony Elumelu Foundation, he believes that Africa is behind with limited budgets and poor healthcare infrastructure. Looking for ways to unlock improvements and equality in healthcare. He sees asking for leveraging the power of entrepreneurship, innovation, and working across sectors to make a difference. Mr. Elumelu notes that the high percent of healthcare facilities in Africa do not have reliable power supply. And without power, the health outcomes will be low. The solution he proffers that incentives for investing in research and development and manufacturing facilities for big pharma in developing countries should be giving attention at this time. All right, now let's move on to our first conversation. Now we see discussions continue regarding the Central Bank of Nigeria's implementation of the 0.5% cybersecurity levy, leaving many uncertain about whether this is going to start. That's going to start collecting that levy by May 20th, 2024. Right now, we've seen reports that the president has spoken and said that it should be suspended at this time. But everyone's still waiting for that circular from the CBN at this time. But let's discuss this and other matters now, especially with tax reforms in Nigeria. Joining me for this conversation, we have Eben Joels. He's the managing partner at this Transact. Great to have you on the show. Good afternoon. Hello, Joel. I don't know if you can hear me. Okay, we're going to try and get Mr. Joel back, but definitely this cybersecurity levy, everyone's still talking about it at this time, and we've seen, different people talk about getting that, scrapped at this time, as the average, consumer, the average bank customer is already squeezed at this time, and definitely we're going to hear more and see if we really need that levy at this time and what else to do going forward. But, talking about getting subnationals, to increase revenue at this time, that's at the forefront. And with debt levels, rising so high, the subnationals need to look inward, at this time to get, to ramp up revenue and internally generated revenue. I had a conversation with the National State Governor this morning. That was on Business Morning with John Mekwa. Let's hear what he has to say.
We took a lot of time discussing some of these issues. Why are we not taking that? Let even every state say that in the north, and that is very easy for any state in the north to say, we are going to clear 5,000 to 10,000 hectares of land, and we are going to plant whatever crop of your own choice and feed your people. With 10,000 hectares of land, you can easily employ anywhere between 15 to 20,000 people to work in the farm. And you can feed the state. You can export the food, whatever crop it is that you are doing. So those were the honest truth we told each other. Forget about the politics. Forget about saying, I am clearing 500 hectares. I'm clearing, there is no forget about that. Let's be honest and say, how much can you do? Pick it up from there. If it is solid minerals, how much can you do solid minerals? If it is what do you call it, oil and gas, how much of the oil and gas are you participating? So these are the challenges. I think we faced them. Everybody came out excited. Whether the excitement would continue to hold or not, well, time will tell. But these are the realities, and that's what some of us in Nasarawa State are taking seriously. We're saying we cannot just be talking and then no results. We have to pick it up from here and say that we are going to achieve something, and this is the direction that we are going.
All right, now let's look at what's happening in other countries now in South Africa. See, Nigerian cuisine is received both within the continent and across the globe. Nigerian culinary delights like the iconic jollof rice, efo, egusi, plantain, yam porridge, moi moi, and more, gaining traction on global menus at this time in a bid to meet the growing demand for Nigerian cuisine in South Africa. One couple have taken a bold step into commercial farming of Nigerian food in South Africa. Our South Africa correspondent Innocent Simosa reports.
When you come up with a truly original business idea, the reaction you most want to hear is, why didn't I think of that? Well, we bring you a story of just that kind in a bid to meet the growing demand for Nigerian cuisine in South Africa. One couple has taken a bold step into commercial farming. Meet Digi and Ife Adeleke from Kwara State, who, after residing in South Africa for the past 21 years, have decided to embark on a new venture, commercial farming of Nigerian food.
We did a lot of trials. Luckily, we were able to get a lot of people to help us with research as well. So yeah, it was just the fact that I had an idea not to give up. and it was us trying it. I remember about 10, 15 years ago, we asked people, could you grow yam in South Africa? And everybody said no. The people who have tried it has failed.
Ife saw an opportunity to make products like soap, lotion, and tea using ingredients from the farm.
My husband is an innate farmer. He loves to farm. I like to make things with my hands. So that's where the synergy comes in. So he dwells on the farming. I come, look at it. I'm like, oh, do you know this is good for the liver? This is good for the kidney. This is very fantastic for the skin. It would be nice to put in the cream, and then I'll try it out.
With the couple's knowledge of Nigerian cuisine and their experience living in South Africa, they cultivate a variety of traditional Nigerian crops right here in Pretoria. From yam, bitter leaf, garden egg, water leaf, ugu, and plantain, to name a few. Yam is set to hit the shelves, but like many farmers, they face challenges, including climate change.
Yeah, climate change is real. In fact, the last 12 months has even shown that with the rain patterns. Yes, we're in touch with a lot of research institutes here. What we basically are still doing now is we're still doing a lot of research and developments with this. We believe when we perfect this farm, we would even open it up to commercial farmers.
As the demand for authentic Nigerian cuisine continues to rise, DG and Ife Adeleke are sowing the seed for a flavorful future here in South Africa. From Pretoria, South Africa, Innocent Samosa, Channels Television News.
All right, thanks, Innocent. Well, definitely there's a lot packed right here in the show. We're going to be checking out how the NGX is starting off the trading week and other global markets in a moment, just after this break. Do stay with us. Welcome back. Well, it's a brand new trading week right here, and also in the global markets, and definitely everyone's looking out for inflation reporting. That's for April, and we have Anita Edet with the details right here for the markets. Well, Anita, I guess it's all about inflation at this point. Everyone wants to know how much inflation is decelerating or not. But right here, definitely we know it's still on the rise at this point.
Yeah, Nigeria's inflation, it has been what you call stubbornly rising inflation because all the monetary policy actions taken by the central bank within the last 2 years doesn't seem to have any impact, which means it didn't get to lower in contrast to what you see in other countries, particularly the advanced economies in Europe, in the United States, and even back here in Nigeria. We saw.
Well, the central bank governor talk about inflation rising at a slower pace. You know, not dropping, but rising at a slower pace. So I guess that's a win. You know, the governor is actually, seeing there.
Well, whether on a slow pace or on a fast pace, the bottom line is inflation is rising, currently at 33.2%. And of course, we have a projection by financial derivatives company saying that it expects that inflation for April will climb to about 34.25%. And let's not also forget that the International Monetary Fund has recommended that Nigeria should continue that monetary policy tightening.
I don't even want to see the forecast for food inflation, but
okay. All right, so let's get to talk about stocks. Stock markets around the African continent at intraday. This is how the market printed at intraday. Major markets around the African continent, that's the four that we track, they were in the green except for Nigeria's stock market, which is still taking too much of profit taking. The impact of profit taking, 0.20% is what we had. As at last week, we saw the market make a pullback, 1.36%, and in terms of value, more than 56 billion naira was lost, and that's no thanks to the impact of profit taking on the likes of Airtel Africa, first FBN Holdings, which countered the gains that we saw from MTN Nigeria, as well as some other key bellwether stocks. So the market was down by 1.36% for last week, Friday. It ended the week in the red, deeply in the red. But this is it as at intraday, 98,000 and almost falling below the 98,000 points, just hanging there by a thread, 98,040.1. at intraday for Nigerian stock market. But for the South African stock market, we see it by a tad 0.09%. In the green at intraday. Now let's look at the other sides of the market for the African continent. We see the likes of Egypt still also in the green, while Kenya is also in the green as at Friday's close. Now let's talk a little bit about what to expect for the market. We will be expecting first. The Debt Management Office is conducting a bond auction for Monday, for May to be precise. Then the market, the bond auction is actually being carried out. So, but the Nigerian the National Bureau of Statistics will also release the April inflation report, which is due out on Wednesday, as from the early part of the day. Today, actually, it's not on Wednesday. The DMO is holding a bond market auction where the results will be announced by tomorrow. So we'll be expecting the market to have an the bond auction to have an impact on the fixed income instruments. That's the bonds as well as the treasury bills, as well as the open market operations of the market. Now, other things to expect for the market: the treasury bills, we expect sell pressure to remain as participants exit their holdings to meet funding needs. While for the treasury bills market, we also see that the impact will be is expected to rivet across that market. Outcome of the monthly FGM bond auction is expected to influence investor sentiment. While for the equities market, which we'll be talking more about, the sentiment is expected to remain bearish. Investors are seeing no stimulus in sight. First, we've had the first quarter results. First quarter is as almost anywhere. We're in the second quarter, but first quarter results for the first quarter of this year, they're still trickling in, and of course we'll be talking about that. Let's talk to our equity trader at ABN Quest, Abiodun Adedotu, to give us more details about the market, particularly when we look at the sustained decline which we've seen so far in the for the equities. The market is down month to date 1.4%, and at for year to date is plus 31.4%. Now, Abiodun, thank you for joining us first. And can you give us details of why is this market sustaining that bearish run which we've seen so far within the previous week?
Okay, thank you very much, Victor. I would rather not call it bearish. I would just say more like it's correction, because of course markets don't just move on a continuous uptrend without trying to shed weight at some point in time. So I would rather attribute this more to correction, and the correction is more due to a bit of weakness in the system, and we've seen this due to a bit of sell-offs by some mixed parties, mostly internationals, in select names, especially among the key banking stocks. And as a result, for the purpose of repatriation of funds, also across board, there might be a little bit of stimulus that's been seen, especially in the manufacturing sector, where companies are struggling, especially in terms of this FX issue, which is well known across the nation. So in the interim, you continue to expect a little bit of a little bit of bargain hunting and things like that. But of course, I don't expect this market to significantly sell off away from these levels. And also, there's also the issue of around recapitalization.
Yes, I can hear you.
Okay, Abiodun, you mentioned banks, and that brings that sector industry into the discussion. So for last month, we've had they had the deadline for the submission of their recapitalization plan, and of course now we're talking about capital raising. So many of them have announced capital raisings, and not just them, other companies are also announcing capital raising. So now, so far, how do you expect the impact of this capital raising to affect the stock markets?
Investors are concerned about dilution in positions, and for anyone who currently has position, the impact of the dilution will be most likely the biggest worry. But notwithstanding, the banks are fundamentally strong. You find them churning out great numbers, unprecedented numbers, level of profitability, across tier 1, tier 2 banks, and you expect them to do just okay. The only worry might just be the quantum of funds that is required for this recapitalization exercise. But mind you, we still have about almost 22 months to go into this recapitalization process, and there's still a bit of time, for them to be able to work magic.
Okay, a final one before we let you go. What is your outlook for the markets closing as we start the third week of May for the equities markets?
I think there might just be a little bit of correction. I don't expect it to be so big. We might just be trading around current levels, maybe 98 or a little bit below.
Okay, Abiodun, I think we'll leave it there and, of course, put our expectation for a positive close if the market would move in that direction. But we thank you for your analysis on our program this morning.
Yeah.
As equity trader at FBN Quest, Abiodun Adedotun with the market analysis for the intraday session. Now, for the Middle Eastern stocks, we see mostly positive movement for the market. Abu Dhabi, Dubai in the green, as well as the Egyptian, the Saudi Arabia Stock Exchange, as well as the Qatari Stock Exchange. That was the biggest gainer at intraday, 0.16% for that market. Now let's talk about Ladi. I don't know if I still have much time, so but
definitely a lot to unpack there, with these markets. But at this point, May is moving really fast,
very fast,
in my opinion, and I'm wondering if it's selling May and go away, if it's playing out already. But thank you so much, Manete, for the details there. Well, yeah, we're still trying to talk about tax harmonization in Nigeria, and obviously this cybersecurity levy at this time. To be or not to be? Well, let's try and get Mr. Eben Jones again, managing partners, Transact. Great to have you on the show. Hope you can hear me now.
Thank you very much. Please confirm that you can hear me as well.
I can hear you loud and clear. Fantastic. So there seems to be a lot of confusion about this cybersecurity levy. I'd like to get your understanding of this levy, and there's a lot of divided perspectives right now on who or what value should be taxed. How are you seeing it?
Yeah, so I think the issue is that in Nigeria we kind of focus on the wrong thing. The original intention of that act is supposed to be to draw our attention to the increasing threat of cybersecurity to businesses and to every country. Cybersecurity insurance, for example, is one of the newest insurance products in the market in most places in the world, and insurance companies, as far as I know it, in Nigeria do not offer these policy products. Now, these are the bigger issues that we should be focusing on. But unfortunately, in Nigeria, the intention is always how to maximize extraction of money. You find out that what has been happening consistently since about 2003, thereabout, is that every now and then new laws are coming in. And as the new laws are coming in, a body is being set up that will be funded by a percentage or the other of revenue being collected outside of the tax system, the formal tax system, by these bodies, therefore suffocating businesses. So the intention should actually be the threat of cybersecurity and to businesses, not only, and originally this law, if you look at it, the 2015 edition before the amendment, was limited to business. It was limited to 4 categories of businesses: banks, GSM companies, internet service providers, and insurance companies, So it's surprising that now it appears that by a singular change in the new amendment to replace, not by changing the schedule that listed the businesses that should be affected, but just changing financial institutions to private and public institutions or something. It was then interpreted by the CBN to mean everybody. It's no wonder that everybody could see how odious that interpretation is, and the downside of it is that it will stifle businesses even more. It is the wrong time, and it's no wonder the president has said it should be suspended. It's also no wonder that we hear that the House of Rep has also ordered that it should be suspended at this time.
Right, so much outcry about this cybersecurity levy. But putting that aside at this time, tax harmonization is another big issue right here in Nigeria. And you see the fiscal policy committee, they're talking about reforms of value-added tax, scrapping taxes on some basic items to compensate, for hike on others. Also removal of VAT on exports. Talk to me about, these proposed reforms and how they can be really, implemented, at this time. We know the government is really trying to raise revenue, and they need taxes at this time.
Yes, thank you. We are waiting to see the output of these reforms because, the reforms should move beyond just increasing VAT rates and then giving additional VAT deductions, for certain transactions. We want to look at the whole universe of taxes in Nigeria. As it is right now, we have one of the highest tax rates in the world. You find a corporate income tax rate at 30%, but that is not the end of the story because there are additional taxes that are imposed on certain categories of businesses. So you have a 1% police trust fund. You have a NITDA levy, 1% net profit. You have several other small taxes that add on to a cumulative effective rate of around 34%. So of after-tax profit. And this is separate from other operational taxes that go with payroll, such as the workers' compensation that is payable to NSITF at 1%, of payroll cost. So I would think we should look at the bigger issues of these additional layers of taxes rather than focusing on VAT and saying that we have one of the lowest VAT rates in the world. That is not the issue. Our VAT Act does not exactly work like other VAT acts work in other climes. Our VAT Act is more akin to a sales tax than value-added tax.
Right, and talking about expanding the tax net in Nigeria, that is still the focus right now. But have you seen any progress, on that so far?
No, you won't have any progress in expanding the tax net as long as people don't understand. The policymakers and the regulators do not understand. That it's only those who are employees of organized businesses that are bearing all the taxes in this country. I've said it before, that a federal system such as we have here, should borrow a leaf from other federal systems such as, say, the United States, where there is an income tax for every individual payable to the center. It helps the center to be able to distribute give rebates and other other credits and subsidies of some kind to people who are the lowest earners in the society. So, but here we have a tax system where individuals and employees pay their taxes to the states in which they are residents, and we know that most of the states' IRSs or internal revenue authorities are not as organized as they should be, so they're not digitalized. There is no mandatory filing of taxes by every single individual. Rather, they go after employers, So you have a situation where most of the people who are in charge of making our laws do not even pay taxes themselves because some of them never worked or they don't work in organized places where they had to pay PAYE.
Right.
So we need to be thinking bigger, have a system where every individual in Nigeria is required to file taxes to the center, and then from there we know that everybody is caught in the tax net. As it is, if you're a very powerful man in certain states, you may not be paying any tax in that state, maybe because you know the governor or maybe and all that. So the tax system as it is skewed against people like you and I who have formal employments.
Right. I guess the little guys end up paying more when it comes to taxes. But definitely we're waiting to hear from the CBN about this cybersecurity levy. But thank you so much. It was great having your perspective, Mr. Eben Joels, managing partner at Transact. Thank you.
Thank you.
All right, let's take it on to London now. We have Juliana joining us from our London studio. Great to have you. Juliana, so we have some data out to see the UK government's stake in NatWest, that's the bank there, has dropped below 27%. How's this being digested over there?
Good afternoon, Laddie. Well, this is all part of the Conservative government's plans to make sure that by 2025, 2026 times, that basically NatWest will be back into public property. This was confirmed by Jeremy Hunt, the Chancellor of the Exchequer, during the spring budget, which was unveiled a couple of weeks ago. And of course, the government have been offloading their stake for the past few years. But I think in recent months, it's been steadily increasing just how much it does sell off. Like you said, I think earlier this morning, they managed to sell off about a 1% stake, quite tiny, but that does bring their share down to 26.95%. And you'll remember, if we go back to 2008-2000 financial crisis, when NatWest was then called the Royal Bank of Scotland, the British government put in multi-billion pounds of taxpayers' money to try and rescue the bank, which it did successfully, and I think it has grown in strength since that time. However, there have been periods of turmoil, for example, when the Chief Executive Officer, Alison Rose, had to stand down because of debanking some customers due to their political issues. But besides that, NatWest has done well, which is why the government do want to offload their shares, put it back into public hands, but then also put more coffers in the government's bank account as we approach a general election.
Yeah, so about half the world having elections this time or this year. But talk to me about data now. We know it's a brand new week, and definitely the markets are going to be moving to some, data this week. What are you expecting in the UK?
It is a brand new week. I suppose the only big announcement that we've got coming is tomorrow, which is unemployment data, which has been, to be fair, for this Conservative government, historically low. We have seen some movement upwards over the past couple of months. So I believe unemployment currently stands at about 4.2%. The City analysts are estimating that it will tick up slightly to about 4.3%. But then if you look at 4.2% compared to some places where we're seeing unemployment as high as 30%, I think it is pretty good. But it is, of course, really important data, because one of the reasons why we're not seeing that interest rate dunk, which we're all anticipating, is because of the labour market, particularly when it comes to average pay and bonuses. So the Bank of England Governor Andrew Bailey will be keeping a very sharp eye on that data tomorrow. Aside that, I spoke previously about an election which is expected imminently in the UK. We did have Prime Minister Rishi Sunak addressing the press earlier this morning, and away from Prime Minister's questions, this is really the first time that we're seeing him tackled on those abysmal local election results, which, by the way, do see Sir Keir Starmer being the next Prime Minister whenever the next general election is. But quite importantly, in Prime Minister Rishi Sunak's address, he did say that he does foresee the next 3 years, not just across the globe, but in Britain, being potentially the most dangerous that we've seen in the past 30 years. Dangerous yet innovative. So what the Prime Minister was trying to say is, vote for us. You cannot trust Britain's safety with a Labour government, which did move the markets because it's a pretty significant statement.
Right, and definitely voters are about to get wooed all over the place at this time. Well, how are the markets in the UK looking?
The markets are looking mixed. There were some early gains on the blue chip index, which has since been lost because of a fall in the commodity share price. The all share at intraday, Laddie, is up 0.01%. The FTSE 100, that's up by 0.02%. But the FTSE 250, which is the domestic market, that's down by 0.16% at intraday. In the currencies market, the British pound is currently trading up against the US dollar by 0.06%, though down against the euro by 0.07%. And the British pound is trading up against the Japanese yen by 0.09%, Laddie.
All right, pound not looking bad right there. Thank you so much, Juliana, for the update. Thank you.
Thank you.
All right, let's take it on to Europe now. See, global trade in Europe is in focus now. See, the U.S. has overtaken China as Germany's leading trade partner in the first quarter of this year. For nearly a decade, China was Germany's top trade partner. Well, joining us for more now is Chiponda Chimbelu from Berlin. Great to have you, Chip. So how did China slip behind the U.S.?
Thanks for having me. Well, Laddie, it all comes down to the latest trade volume figures. Exports and imports between the US and Germany amounted to 63 billion euros from January to March this year. That figure is 3 billion euros higher than the volume of trade between Germany and China in the first quarter, which came in at 60 billion euros. The latest trade data shouldn't be surprising, of course, for those who follow Germany-China trade closely. China's lead over the U.S. as Germany's leading trade partner has been narrowing in recent years. Analysts say economic trends may be behind this development. While the U.S. economy has been doing well in recent years, the Chinese economy has been struggling. So what we are seeing is Germany exporting more to the U.S. at a time when Chinese demand has been slowing.
Yeah, quite interesting. But what is the latest figure? What does it say about Germany-China trade relations?
Laddie, the latest figures could be a reflection of ongoing geopolitical trends. At least that's what economists are saying. Germany is moving away from China, which it considers a systemic rival. And Berlin, of course, has been urging German firms to de-risk from China. And of course, as a result, that could be shifting the trade volumes towards Germany's transatlantic partner, the United States. But it's also worth noting that the Chinese economy is more sophisticated now than it was a decade ago. Now, that means that Chinese businesses and consumers are also buying more goods locally. And here in Europe, Chinese companies are also competing more with their German peers on the European market. That is definitely the case when it comes to electric vehicles. In fact, about a third of China's electric vehicles head to the EU, according to an estimate by Bloomberg News. And of course, that has ruffled some feathers here in Europe. That's why the EU is investigating whether Beijing's subsidies for electric vehicles give Chinese-made EVs an unfair advantage in Europe. Now, the decision on that has, of course, soured relations between China and the EU. And of course, that includes Germany as an EU member. And any tariffs on Chinese EVs could worsen relations between the two, China, of course, and the EU as well.
Quite interesting. Well, what are you seeing in the markets in Europe today?
Laddie, little movement is expected on European markets today. Investors are cautious as they await data this week. Traders are waiting for the Eurozone's first quarter GDP and consumer price index figures, in addition to much anticipated U.S. April inflation. The data could provide clues on potential central bank interest rate decisions and the investment climate. And in terms of news, investors will be watching for updates on the sectors affected by U.S. tariffs on Chinese goods. There are media reports that tariffs on Chinese electric vehicles are expected to rise more than 100% from 27.5%. Now, that is a move that, of course, could affect the EV industry tremendously.
Right, all eyes on that EV industry. Thank you so much, Chiponda Chimbelu, for the details there from Europe. Let's look at some stories now out of Africa. We see the Equity Bank Group, the Q1, the first quarter profits up about 25% to 16 billion Kenyan shillings. With relative growth across subsidiaries that's pushed the bank's net profit for the first 3 months of the year to about 16 billion from 12.8 billion shillings in the same period last year. The group cemented its position as the second largest bank in East Africa in terms of asset base to close the quarter at 1.7 trillion shillings, up from 1.53 trillion shillings, same period last year. Taking on to East Africa now, Egypt's central bank is offering 564-day Treasury zero coupon bonds worth about 6 billion Egyptian pounds. See, the Ministry of Finance authorizes CBE to manage its own offerings of treasury bills and bonds in Egyptian pounds throughout the fiscal year to fund the general budget for 2023-2024. Zero coupon T-bonds do not pay interest but reward investors with a higher principal return at maturity, and that's explained by most economists. All right, now let's get a check on the crypto market at this time. We're seeing the Bitcoin there. That's the leading cryptocurrency. They're standing at about $62,792 earlier today. So it's not looking so bad in the market, but we've seen that range-bound movement right there with Bitcoin. And if you look at the screen there, it's mostly green on the screen this afternoon with 2.72% rise for Bitcoin. Ethereum holding up 1.47% up, $2,975. Below that psychological level of $3,000. Solana, that's holding up to $145. But for the red pockets now, we see XRP has that color, AVAX, Ethereum Classic, still trading in this market at this time, Matic and the rest. Let's look at the sentiment right now. Let's see how investors are looking at this market. It's still greedy, surprisingly, even though we've seen a lot of sell-offs with Bitcoin, post-Bitcoin ETF and post-halving at this time. Most investors were expecting a massive pump post-halving, but we see the market now consolidating at this time, 57 points. That's the sentiment right there for the market. Let's look at the top cryptocurrencies we track in the market there. We see Bitcoin holding up 2.72%. There were indications it was going to drop below $60,000. It's tested those levels, but managed to rise back above that. And we see BNB, Binance coin there, 0.94% up. Ethereum also holding up 1.47%. Well, at this time, it's all about regulation for this crypto space. And right here in Nigeria, we've seen exchanges, that's crypto exchanges, under a lot of pressure this time. Let's bring in Nathaniel Luz now, CEO of FlintCap. Great to have you, Nathaniel.
Hey, Ladi, good to be here today.
Yeah, so we're seeing foreign crypto platforms in Nigeria. They've been under a lot of pressure at this time with the delisting of the Naira, from most of their platforms. But do you think this is some kind of opportunity for Nigerian crypto firms? Is it time for them to step up?
Yes. So what we're seeing is a period of chaos. But a period of chaos is necessary in the adoption phase of any new technology. The entire cryptocurrency market, the crypto industry is less than 20 years old, right? Banks also had this period of their own chaos, right? The invention of ATM machines and the regulations around them in Nigeria are older than the crypto market in itself. So the crypto market is now facing this period. It's a make or mar period. Should we all just resign and say, oh, crypto is not working, this, the government has said that? I think that the right thing is for us to look at the opportunities that this provides. The problem a lot of crypto exchanges are having is that each country has its own regulators. They have their own financial rules. Hence, it becomes difficult for one company to manage to be compliant in so many countries at the same time. I do not see a future where we're going to have one super crypto exchange, because even all over the world, we don't have one super banks. Rather, we see national banks, we see regional banks, international banks, and all of that. So I think that's what we're going to see. So this is also an opportunity for us to see homegrown solutions, homegrown crypto exchanges that understand what it means to be compliant in Nigeria. This is the opportunity for them to get the SEC license and fill in the gap, Ladi.
Right, but we've seen some crypto platforms in Nigeria, come up, gathered a lot of money, but somehow they just went under because of some kind of hack. We know the story of Patricia, and we know some investors are not being able to get their funds, out of that platform. So how can Nigerians really trust, Nigerian crypto platforms? We know that it's a wild, wild west, when it comes to, crypto exchanges. Talk to me about gaining the trust of Nigerians.
This is why the government actually stepped in with the policies. We had a time in Nigeria where banks would just shut down and your money was gone. My parents lost some money in some of those banks, right? And I believe a lot of us, our parents, also have those stories to tell. So that's why the government says, hey, prior to now, anybody can start their own crypto platform, start a crypto exchange. But going forward, there are going to be different licenses for different types of crypto platforms or crypto exchange operations, just like we have for banks. There are microfinance banks, there are different tiers, there are commercial banks, national, regional, and all of those kind of things. It's why the government is saying, see, anybody that wants to run this kind of project, and cryptocurrency exchanges are financial platforms, and whether we like it or not. So everybody has got to get a license, and by so doing, you become accountable to the government, right? In fact, I think it's because we do not yet have that in place. That's why we're seeing all of this chaos, the back and forth. If the CBN has a problem with some banks, they don't do a press statement. They call those banks to a roundtable. So we need something like that also in the crypto market in Nigeria.
Right. All right, let's look at Bitcoin technology now. It's over 10 years since Bitcoin came into existence. Talk to me about how much Bitcoin, the technology, has contributed to traditional banking and the world today in general.
Yeah, so Bitcoin itself is a great technology, like every technology is. It now depends on what aspect of it you want to use. So people generally use a technology to fill an aspect in their lives, in quotes, where there is a deficit, right? So if you look at the West, Bitcoin is a luxury. That's why you hear ETFs and all of these fancy terms. But when you come to Africa, we don't talk about ETFs because Bitcoin here is a lifeline. It's a necessity. Bitcoin will connect us as Africans to the global financial markets. Africa has been cut off, and most of the third world has been cut off from the global financial play. So crypto gives us that entrance. Bitcoin gives us that way of reconnecting us back to this global market. Just ask yourself how easy it is for you to make or receive payments to maybe someone in even Kenya, right? Then not even talk of someone in maybe Malawi or Rwanda, and we even want to go outside Africa and talk about India and China. We have a lot of people, we have an economy that's very import reliant. How easy it is for people to move from Naira to these other currencies and all of that. The average Nigerian cannot receive money I'm using PayPal. Most global platforms are going to block you once you know that you're from Nigeria. It is what it is, right? So Bitcoin gives us that layer of reconnecting in which it doesn't matter who you are, it doesn't matter your gender, it doesn't matter your race, it doesn't matter anything about you. Everybody can participate in the same global financial system. No discrimination, it's permissionless.
Right, let's look at fintechs now. Definitely, fintechs have been touted to, bridge that financial gap, in most economies at this time. But right here, we've seen the CBN direct fintechs to not carry out, crypto transactions. So talk to me about, the relationship between, fintech and crypto. Can they move together at this point?
They can actually. So I think what the government is trying to do, the idea they have is a cool idea. I mean, every government does regulation everywhere in the world, but I think that there's something wrong with the implementation. You understand? I personally believe that the government is doing too much force when implementing this. We already know that you are government. No need for you to prove it to us. Like, we know you have a lot of powers because you are the government, right? Ideally, innovation always precedes regulations. So the guys that imported the first place, there are no regulations about airports or flying them. Right? So most fintechs are saying that, see, we can build things upon crypto. We can use crypto as a technology to make international payments easier. We can use crypto to make remittances easier, right? I can receive money from anywhere in the world in a few seconds with crypto for almost zero fees, no matter how much I'm moving, compared to maybe using the traditional guys like the Western Union or the MoneyGram and all of that. So people are beginning to ideally build businesses around those opportunities. You understand? So that is what we're going to see. Anywhere you see an opportunity, businesses would spring up. We are in a capitalist world in that sense. So people are always looking for opportunities to exploit and how to package this and create a lot of value out of it. So the government is stepping in from their own angle and saying, we are going to have regulations. But the regulations should not be throwing away the baby and the bathwater, like what Nigeria is currently doing. Because it's one thing for the government to take actions. It's another thing with the way the whole world views it. It's two different things. It's one thing to do a thing. It's another thing for you to have it being reported and all of that. The current stance we are giving is that, crypto is banned in Nigeria, and Nigeria is not open for crypto business. But that's actually not correct. Right? Because we also had a meeting with the SEC last week, I believe, and and all they're saying is you have to be compliant, you have to do this the right way, you have to get the licenses, we have to have the ability to have the regulatory oversight over you guys. So what the government needs to clearly state is that, see, crypto is not banned. We're only saying only licensed operators should operate. Then make the steps clear for anybody who wants to get a license. That's what I think.
Right, and definitely with the decentralized nature, of cryptocurrency, centralized, governments would not, don't like that, aspect of cryptocurrency. Talk to me. Do you realistically see a time where governments, central banks, and cryptocurrency will ever get along in this world?
So happy to say I have a master's degree in this crypto and blockchain theme. So there are different types of cryptocurrency. We even have central bank digital currencies that the idea of crypto and Bitcoin itself is decentralization. Now, that the cryptocurrency is decentralized does not mean that the platforms are decentralized, right? So, for instance, Binance is not decentralized. You mentioned Patricia's Flinker, which I'm the CEO, is not decentralized. These are companies that are built around the technology. You understand? It's just like the way we have companies built around satellite technology, around video technology, right? So it's the goal of the government to regulate these companies, not attacking the core of the technology itself. I mean, it's still people that will build the services that make that technology usable. Water is decentralized, right? But people own pure water factories and they have to get NAFDAC registration number and get licenses and all of that. So the resources of the earth technically are decentralized, right? But we've also been able to come up with regulations to manage how they are mined, how they are used, the companies that manage all of those processes. So it's the same thing in crypto. Crypto itself is decentralized, but yes, the government can work hand in hand with crypto platforms to see that, again, this thing is technology. Is fire dangerous? Depends. Fire drives our cars. If without fire, our cars would not move. Do you understand? So is water dangerous? Depends on how you use it. Water could cause flooding and could also give us electricity. So it's the same thing with every technology, including cryptocurrency.
Right. Definitely not easy, regulating new technology. Thank you so much, Nathaniel Liu, CEO of FlameCap. Thank you.
Thank you, Adam.
All right, that's the show today. You can visit channelcv.com for more updates. You can also watch this again on our YouTube channel. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.